Hello everybody and welcome to this week's Motor Trade Radio podcast powered by eBay Motors Group. It is Saturday the 10th of September and joined by myself, Philip Nothard. And this week I have the pleasure of welcoming back the special guest, Andy Conde from Manheim Auctions and leading dealer David Bilsborough from Cheshire Cars. This episode is 48, season 8 of Motor Trade Radio, bringing you all the chatter that matters. So welcome back to the podcast, guys, whilst Curtis and Molly. I presume Molly's gone in a kennel somewhere or somebody's looking after Molly because Curtis has gone all the way over to Australia for a few weeks. So welcome back to the show this morning.
Good morning, Philip. Good morning, Andy.
Yeah, good morning, both. Good morning, both. Lovely to be back. Thank you.
So we'll try and keep this within a reasonable time because when you get us three together talking about the industry, we can certainly get carried away and talk about a lot of things. But I think with what's going on this week in the world of politics and everything else, certainly a lot to talk about this morning. But let's start with yourself, David, and tell us how the year is going so far in your world as an independent dealer without sort of a physical premises in terms of a showroom and everything going on at the minute.
Yeah, so we're actually having a very, very good year, very decent indeed. We're not finding stock at the moment too difficult, although obviously I don't want to preempt things, but we are doing quite well with buying cars and we're buying the right type of vehicle that we need for our profile. So we're up on profit and level on unit sales. So obviously that's pretty decent. And I'm looking for a strong third quarter. We're just into the third quarter of the financial year. And so far, so good. So everything's pretty good, really.
Have you seen any sign of easing, or has it been a fairly stable through sort of Q1, Q2 into the third quarter? Or how are you seeing it from a consumer activity perspective in terms of, what you're doing?
I think it's fair to say, Philip, that the demand has slightly tailed off certainly in August. But having said that, it did bounce back at the last hurdle of August. So the last week or so, it was very busy and we did take some orders. Looking around at my colleagues as well, they also seem to have taken orders towards the back end of August. But for the majority of August, it was pretty quiet. Having said that, the rest of the year has been buoyant. We've not really seen any consumer sort of resistance to buying a car. If the car is correct and it's presented well, as I always say, you've got a very good chance of retailing and finding a buyer. So, and I think we're optimistic that we'll end up with a decent year.
And Andy, yourself, I mean, in the world of wholesale and the world of auctions, and you tell us, because we've been watching obviously in terms of trade values, they've remained what we would describe as fairly plateaued for the year so far. But that's in terms of supply and activity and that physical and that online versus that in-person activity, what's happening in the world of wholesale at the minute?
Well, as you said, up until probably we had some really difficult months through from January to June, and then the job has really taken off, helped by a lack of supply. But we've seen August has probably been the busiest August in auctions that I can recall in the many years that I've been in this industry. We've sold more cars, but we've had fewer cars coming in. So percentage-wise, our percentage has been higher than ever before. The demand has been higher than ever before. There's certainly been a really big impetus in interest, particularly from the car supermarkets. And you can almost split the sections into three. You've got the main dealer part exchanges, which are really, really busy. Those, I always call them those nice little pippins that everybody wants. You can sell those until the cows come home. Big attendances, more people attending those sales physically, which I'll talk a little bit about in a minute, than we saw before. You've got the manufacturers' sales on behalf of leading manufacturer groups. Very rarely do we have a sale that we don't crack 90%. Most of them we're selling everything, and that's a signal of a lack of supply of new cars. And then we go on to the fleet finance, which as a company, we've reopened again. We've reopened the doors now of the majority of our auction centres to physical buyers. And while it's lovely to see them, the actual there's not been a stampede of people returning back for that sort of vehicle, because I think we've made it very easy for people to buy online. I think but we've certainly seen an increase in prices, because what we've seen is that man on the auction hall floor maybe bidding on a grade 4, giving the confidence of the man sat on the end of a computer screen, thinking, well, that car's not as bad as what I think, I'm going to have a go as well. So I think we've seen a number of issues there, but I can't see that the job is certainly going to tail off. We're sitting here now, 10 days into the month, seeing very few new cars. The demand will be there. My view is for the rest of the year.
And just touching on the point there you made in terms of those sort of grade 4s, those grade 5s, and recently we had Devon Martin on talking about the cap HPI movement of 0.3% going from August into the month of September. And part of that interview, he obviously talked about the challenges around those poor condition vehicles, those, lower grade 3s into 4s and definitely grade 5s, where a little bit of nervousness, because you've got challenges there of, not necessarily the nervousness of book movements, because they take that a little bit more time to get them ready to retail and on the forecourts, but actually those costs of repairs and delays around the aftermarket. What's your feeling at the minute? Do you think that physical element is helping that now and really turn the corner to help move those vehicles on?
I don't think we've really turned the corner, but it will certainly help. And what we will see, we'll see those vehicles that were probably purchased, whether company vehicles or private, pre-COVID, that people have bought, maybe poorer colours, certain manufacturers, low grade, low specification, coming back to the marketplace, and they will be tough to sell. There's no doubt they will have to be priced very realistically, because they'll have done more miles. The conditions, as you quite rightly say, will be poorer, and they will have to be priced accordingly to find a new home. But those vehicles that have there's an old saying, isn't it? You speculate to accumulate, and if you buy a vehicle at the start that you've spent a bit of money on, you've had a few extras on it, you will start reaping that money back now, in my view. And as David quite rightly said, it's those special vehicles that are still going to sell and going to make all the money, and we're seeing that now.
And talking about vehicles, I mean, just first yourself, David, we know anybody that follows you in the social space, very much, especially man in the man in the shed videos, but you do like your Abarths. I don't think anyone can challenge you in terms of your knowledge around the world of Abarths. But is there a certain type of vehicle that you see in a little bit weak? We talked to Darren about the weakness setting into some of those larger SUVs, particularly in the sort of the petrol diesel. Coupe cabs have remained fairly strong. I mean, we're talking about September now, and there's still strength in that coupe cab market, which would normally have sort of started to ease off by this time of the year. But what are you seeing in terms of things that you're looking for, keeping your eye on, or keeping away from at the minute?
Yeah, so the only thing that we're not really thinking we should be buying that car is large sort of Range Rovers, X3s, 5s, petrols. We're not really into the performance end of this, or the RSQ5s and things like that. So those aside, they might be performing reasonably well, but the petrol 2 litres, 2.5, 3 litre petrols were not. And that was a sort of reaction to the fuel prices, and thinking that people, won't be too keen to experience a 2 litre, 200 plus brake horsepower petrol at £2 a litre almost. But obviously, as we know, prices are now easing back somewhat, so there could be a little bit of movement there. But in terms of the market generally, we're not seeing any easing of values. What has enabled, I think, people such as ourselves, the independents, the small independents, to get some traction in the last 3, 4, 5 months is some of the bigger groups maybe have filled up the forecourts, as Andy alluded to, with average spec cars. and they're not finding buyers as quick. They're probably turning them over in 90 to 120 days, whereas a nicer spec car and a better colour, because colour is very important, obviously, can change hands within 30 days. So I think that may be one of the reasons why the smaller independent dealers having some traction and getting those cars. I don't personally see any fears for the future in terms of price reductions. I really don't. I mean, in fact, we've witnessed some prices going up by plus £1,100 on Cap Live in a week or 10 days from the first of the month. Some vehicles have risen by that much money. So I don't think any of us should be overly concerned. If we're prepping them right, we're buying as much as we can the best sort of colours and trims and specs, then I think we'll be successful.
And Andy, in terms of you talked about pricing right, and this is always when we do have these conversations with you, and we talk on a regular basis. But it is all about pricing right. When we through the early days of the pandemic and other market changes, it's about keeping on top of the pricing and pricing to the market, not pricing what it necessarily stands at in some cases in a depreciating market, but pricing right to the market. So on David's point around, his certain vehicle sectors that he's keeping away from and certain ones that he's focused on, what are you seeing now in terms of that strength and weakness in terms of particular sectors and model types? Are you sort of seeing that?
Yeah, my views would reflect exactly what David said. Those high mileage Range Rovers, the big sort of what we call the old Chelsea tractors, are really, really tough. Especially, there's a lot coming back now, particularly from finance companies with 80, 90, 100,000 mile plus on them, which look almost unsellable. You think, you're trying to get a bid on a maybe a 6 or 7 year old Range Rover that's done 90 odd thousand miles, and you're starting it. You're asking for £3,000 or £4,000 behind cap, and you cannot get a bite at it. And then you may get somebody just sniffing around it. You're submitting the bid. No, it's not enough. And when the job's like this, the role of the disposal manager is absolutely key. And I think a focus has been taken away from that in our industry, because that man standing next to the auctioneer, and we're seeing, and luckily they're coming back physically, is more important than the auctioneer. That experienced person that can read the markets and say, yeah, I'm going to do this, and that person who's brave enough. Those that have been in the market a long time will quite often get a car on sale substantially below what they really want, because they will then allow the market to take its place. And I think you need to have a culmination of good auctioneers, good disposal managers when the job is like this, because you've just got to read that market. But those big 4-wheel drives, they're going to take some selling, and the only thing that's going to save them is a big downfall of snow come January, and you might just get out of a few, but that's a few months down the line.
And we talked obviously. I mean, 2021 was a period where majority of stuff could find a home fairly easy. In most cases, irrelevant of maybe a bit of a service history missing or a misdescribed panel or something here, there, and everywhere. The market was so strong that you couldn't really go wrong with a lot of stuff. And there was a view of the sector that some of the market became a little bit complacent on
There was signs, Phil, wasn't
appraisals.
there? There was signs the end of October last year, in 2021, that the job was going to go off.
Just started to turn, didn't it? Where
It did.
suddenly cars that were not quite as described, or the appraisal wasn't done correctly, or whatever, were just struggling a little bit. And do you think the market is now back on where it was pre-pandemic? Because we talked about get the running shoes back on, get back to basics, get back to those doing the detail. Do you think that's now? Are we back there now from a vendor's perspective in the market?
I think we are, and I think, again, what happened back then was, I think people bought cars and they got a bit carried away, and then they looked at the stock and they thought, like, oh, that car owes me too much money. And that was when the brakes came on. And I think there'd be an awful lot of people being affected by that. David's probably in a better position than I would be to comment on that. I know David, being a tight Cheshireman, probably wouldn't have spent. I've never known him pay over the top for something, but he probably wouldn't be drawn into that. But there will be a lot of people. So, but yes, I would agree with that. We are back to where we were sort of pre-pandemic, interest wise.
And David, I mean, to Andy's point there, I mean, you're competing, and correct me if I'm wrong. You may have been competing last year where you had your price set in mind based on a appraisal and condition report on a vehicle, and you got outbid, and because people were paying good money for vehicles that may not have that ready to retail or it had the damage. What's that like now? Because you're still competing in a marketplace, and to your point earlier, some vehicles are now starting to rise in value again. So there's still heavy demand for the right vehicle. How's that now in terms of the market that you're in?
Well, for myself and for us here, it's based around data knowledge, and on the model mix, the specs, what is standard, what isn't standard, and certainly things whereby we just purchased an Evoque, for example, with what I thought was a fantastic colour, £900 optional premium paint finish, panoramic roof and bigger wheels. And now that car lasted about 48 hours, and I could have sold it 3 or 4 times over. That was for sale on a marketplace open to all the dealers. So all the big groups, Sytners, Jardines would have seen that car. So we would have seen that car in 21. We wouldn't have had a chance of buying that car. It would have probably done another £500,000. And where some of the retailers are working for, I think, add-ons, tyre insurance, MOT insurance, paint protection, the smaller independents aren't always working in that way. They may touch on some of those products to add to the bottom line of the vehicle, but I think a lot of independents are still working on a part exchange possibly being the sort of holy grail, a retailable part exchange and some finance commission. So there's sort of synergies going on that are sort of unique to certain sectors. So we are buying cars. We're buying more cars. It seems that we're buying more cars than last year. Unit sales are level for where we need to be, but the profits on them are higher. So far after 7 months of the financial year. So we're very content. I'm very happy with that. And if I can just push forward through the next sort of this quarter and the final quarter, I think we'll have a very, very decent year. And then the challenge comes for 23. I know we're not going to touch on that at the moment, but goodness me.
There's only so far we can talk about the future, isn't there? But before we start talking about the future, alternative fuels, EV, we touched on the point about, you said about the pump prices and we know it's starting to ease a little bit as the price of oil has dropped in August, and it's starting to find its way onto the forecourts a little bit. But at the same time, where we saw the focus move towards alternative fuels, particularly into EV, and I think the cap HPI values went up for the majority of the alternative fuels from August into September. But at the same time, we're now starting to see the pressure on kilowatt per hour prices, the energy cap, and everything else he's talked about. Before we move on to yourself, Andy, and talk about the wholesale world of things, but what's your view in terms of whether it's yourself, David, or other dealers that you're talking about, their attitude now towards alternative fuels and particularly electric vehicles? Because I know you've had 1 or 2 yourself and you've done okay with them.
Yeah.
What's your view on that?
Well, I still think that we have a long way to go as a nation with infrastructure and solutions for people, especially in built-up areas. So there is always going to be that in the short to medium term. But I think there's no doubt about it. The market for EV and hybrids are going to be the place to be in the coming years. Obviously, cost of ownership, both as a wholesale point and a retail buyer, will be quite interesting to see where they settle, because I think some cars are sort of too high, in my opinion, but that's because of the supply and the demand that's out there, obviously. So that might just, if that just sort of comes back into line a little bit more. But I think dealers aren't who aren't looking at that, maybe you're missing a trick. I think you've got to, now is the time to start doing your research on the EVs and hybrids. And I think those that do it will be doing quite well and have the a seamless switch over into EV and hybrid, because it's coming. It doesn't seem to be any sort of negativity in terms of, it will come. And I think it could come for a lot of people pretty quickly. And others who have managed it, and I think that's us, will, ease into it, and it will be a seamless process, because that is the ideal scenario for me as a business owner, to ease into new technologies seamlessly and, be authoritative and confident with doing so.
And Andy, in terms of the wholesale, and you spend a lot of time talking to the buyers and the vendors at auctions, and as a driver yourself, doing significant levels of mileage, maybe not back to your pre-pandemic level, but you're still doing a good level of daily and weekly mileage. What's your view at the minute towards EV, on the points that Dave's just been making there?
Well, infrastructure's got to be key, and that's the issue. And I think infrastructure and confidence. I was listening to what David was saying there, and it came to mind that when we're selling electric vehicles, we almost know there's a community. I'm going to say little, but a relatively small community of buyers who are buying EVs, and we know exactly that they're going to be online for that car. But I think a lot of the bigger car, unless you're buying the sort of the Evokes, the hybrid Evokes and stuff like that, we're doing okay with those. But I think people are still really skeptical, and again, if you're in, I think if you're in the cities, people are going to be looking at them. For me, living out in the countryside, and would I personally buy an electric vehicle at the moment? Probably not. I would wait. I want to wait, and I want to see that infrastructure improved. I want to see the technology improved, and I think a lot of people would feel the same way as I do. There is a marketplace for it. Again, I agree with David that some people are trying to price themselves out. Certain marks are far too expensive, but others, they look in line where they need to be. So I don't think we're ready to completely take off for EVs yet, but there is a marketplace there for it, but a very small community of buyers for them.
Yeah, I mean, yeah, you say there's a lot to happen, and obviously this week we've had the change in Parliament, and there's probably a lot of things that are priority for the new Prime Minister to get their head around, and what will move, and whether that's retaining the Road to Zero strategy or that gets realigned and things like this. But as you say, to both the points, it's coming. It's just, there's a lot to do in there before we do get there. So thinking ahead a little bit and trying to keep away from the politics of the world, but remaining with yourself first, Andy. If you look at the cap HPI, plate lift excluded, we're at 8% year to date, taken into September. We've got 3 movements to go towards the before the year end. Early forecasts were that we'd see a 15% depreciation year. I think that seems very unlikely now as we move more towards that fourth quarter as we come out of September. Seasonal average going into October is level, and then 1.7 going into November and 2.2 going into December. So even if we saw those seasonal movements going into the final quarter, that's still only 11.9% depreciation for the year. And you and I have spoken, well, all 3 of us have spoken independently around some commentators that the market might see significant levels of volumes coming in this fourth quarter, but it's still, we're in mid-September now, and it doesn't feel that way. So what's your view on the sort of final quarter of the year?
I'll be very surprised if we see significant increase in volumes across the board anywhere. You may see it in I think there's probably going to be a few more possibly commercial vehicles around, but I think from the car market, I can't see where it's going to come from. It's certainly not going to come from the part exchanges, and you're going to see the main dealers who have been lucky enough to sell new cars will want to hang on to as many of those part exchanges as they possibly can. I remember doing a podcast 2 or 3 years ago when I commented about we're going to get the part exchange and the part exchange and the part exchange. I think you can add another part exchange onto that now. I think we're going to be 4 down the line, because I think people are going to be hanging on to those cars, thinking there's going to be some profit in them. I deal with a lot of the car supermarkets, as you know, and they're changing their profile. Who would have thought some of them would be selling 80,000-mile cars, but they're having to. And that is where the changes has become. So I think towards the end of the year, I can't see a massive move on depreciation. I think 12% would be my feeling, possibly where we're at. But apart from that, I can't see numbers in volume coming back. And if you look at the demand, I think if there are any bigger volumes, and we always know September's a relatively good month. It's that October, that sort of it's usually that second week in October, almost until the first week in December. That 6 week period is in this industry one of the tougher periods, and I think it'll be interesting to see what happens through those 6 weeks. But I can't see it changing, and then we're then looking into the pre-Christmas buying period again, and if volumes continue to be low, I think prices are going to be, and demand are going to be, continue to be, very healthy.
And I know you've touched on it a little bit, David, but what's your view for the remainder of this year? Do you feel that, I mean, you talked about seeing an increase in values in some areas where people continue to fight for those ready to retail or prime stock vehicles, and even if it's moved away, as you pointed out earlier, from some of those larger supermarkets that might have additional financial business pressures, end of years or things like this that they need to contend with. What's your view?
I think I felt at the beginning of the year we would end up between 10 and 15%, and I think it's going to be true. I think that's going to be where Andy's just said 12. So I need to take a pat on the back for that, actually. But I was quite. I thought, I don't know whether I'm right there, but anyway, it looks like I am. And I think there's just not going to be, even though demand has slightly waned and may wane still a little bit further with the cost of living, depending on what the Prime Minister can do for the country. But not just for private individuals, but businesses as well. There's a lot of businesses will be under pressure, and they run cars and vehicles commercial as well. So I think the next few weeks even will be quite interesting. But I don't think we haven't spotted any significant, lack of interest. The good cars, good colours, good specs. Again, I know I keep repeating this, but all those things, videos, dealers need to sort of. They've had a good 21, obviously, and cars were just selling like hotcakes, weren't they? So I think now it will sort some dealers out from those that maybe aren't proactive and don't do what is considered to be the norm now, retailing cars, a lot of social posting and YouTube channels, etc. I just don't see any collapse in the market. And I think, we can all be confident. At least those of us that are proactive can be confident that we'll finish up with a decent year.
Yeah, and I think that's a good point. And a lot of the conversations I've had recently across the sector is, much of it is about, the commentators, the opinion is giving that area of calm and the rationale and the context behind what's happening, because you can soon we are very good in our industry, aren't we? I mean,
Yes.
as you alluded to before, Andy, we're very good at looking back and not forward. We're very good at talking the market down. We're very good at starting to say, oh, well, it's going to be this, it's going to be that, and therefore you start to bid behind the market. You start to put a little bit of pressure on your retail prices and your margins, and suddenly it creates this knock-on effect right across the sector. So it's going to be interesting. And just finally, because we are trying to keep away from the politics of this week, but, you talk about best practice there, David. Andy, if there was a couple of best practices at this time of the year now, as we mid-September, we are probably going to, the reports are that the order banks are reasonably full with the franchise network, and that's in context to the availability of stock. So it doesn't necessarily mean that we're going to have a bumper September, but whether that's 250,000 to 300,000, it's still off the 400,000 mark. But what going into this final quarter of the year, what would you advise as a couple of best practices for people putting cars into the auctions and the wholesale sector?
Price them realistically and make sure that you sell every asset you can with that car and they're well advertised, well presented. I know David's a big thing about presentation, but those cars, and if you're going to try and sell a car and it needs, something I've got, it needs wheel trims or it needs, it needs a few quid spending on it, you will get that money back. So I'm fine, just be brave and be confident in what you're doing. That would be the tips that I give.
So is it the time then, just picking on that point, is it the time to start to, try and take that high-end grade 3 into a grade 2?
Yes,
and that top-end grade 2 into a grade 3 for not much cost. We're not talking taking a grade 5 to a grade 2, but getting those in a little bit better, a little bit less work for the buyer to do. That speeds up that option of getting it onto a retail forecourt and ready for sale as quick as possible.
Absolutely. If a buyer can buy it, clean it, sell it, he'll give more money for it.
And finally, to yourself, then David, anything to add to these? I mean, you're talking about buying right, pricing right, and they always say it's the profits in the purchase, not the sale necessarily. But what's your best practice at the minute?
Well, just to keep doing what we've been known to do over the last 26 years, really, which is obviously all those things, and just continuing to extend the presentation, really, just keeping ahead of the curve with people and making sure that our vehicles that we offer are the best in the market, price to market, and we're flexible with delivery options. We're still maintaining free delivery, and I was thinking maybe I should be charging for delivery, especially at £2 a litre, but I'm glad that we're seeing an easing. So we're I'm sort of off the edge of making a decision to drop free delivery, which was a big one, as we one of the first dealers to do it 11, 12 years ago. So we'll continue with free delivery. We'll continue to be flexible. We'll continue to offer some of the best vehicles available at the best possible retail prices, and obviously make sure that the experience that buyer has is positive. And obviously if it's positive, then as both of you know, we do a lot of sourcing for people, cars that we haven't got, but we can, they know we can more or less source for them. So that's continued to grow this year, and we're just about to go and pick up another source car this week from the weekend. So those customers that trust us, know us, and share our name and good business practices with other people, then we're delighted and humbled to be seen in that light. But it's hard work. We're putting 12, 15 hours a day in, so it's not easy.
Well, I mean, as I said right at the start, we could talk for hours about things going on in the market, and we've really only touched a small element of that this morning. So, I mean, just thanks for joining us this week, both to yourself, Andy Conde from Manheim, and obviously yourself, David, from Cheshire Cars. It's been a pleasure. You, as always, you are welcome back on. We shouldn't try and leave it until Curtis has a holiday, really. We should try and get you back on with Curtis, and because Curtis is a far better interviewer than I am. I tend to go off at tangents. He's very more.
You work well together.
He's very more scripted than I am. He sticks to his script. We won't talk about the editing I have to do, but we're right. But no, it's been an absolute pleasure for joining us this week. So thank you for giving up the time to come and talk and share some of your thoughts about the market to both of you.
You're most welcome.
It's a pleasure.
We enjoyed it.
Yeah, I look forward to the Christmas special.
Yeah.
So that's it for this week. You've been listening to the weekly Motor Trade Radio podcast powered by eBay Motors. If you haven't listened to last week's interview with Mark Lavery, who is the CEO and chairman from Cambria Automobiles, that is certainly not one to miss if you've ever had the opportunity of meeting or speaking to Mark Lavery. And next week, join us again for another special interview, and again, not to be missed, because this is an interview with Dale Wyatt from Suzuki. And again, if you know Dale, very open, very frank, and obviously very much talking about what's happening in the world of Suzuki and his views on the market. So again, don't miss that one on next Saturday as well, Saturday the 17th of September. So in the meantime, please stay safe, stay well, and thank you for listening this morning.